2, 1, and we are live, simulcasting as per standard case, on YouTube and on Telegram to our group and our hunting party group, very special hunting party. And what I think are going to be a very special, at least for myself, a very special celebratory week. It is a celebratory week for everyone here. Let's get this going right away. Welcome. My name is John Davies. You know that by now. Thank you very much for joining us for our morning, now 0800 2-minute drill. We affectionately retitled that many months ago, our cold and flu season report. But right now, 0800 for opening day of an abbreviated week 9 of the campaign, the 22nd of February 2022. If you're new here, I hope you have made this part of your regular daily journey for the last over 2 years. And if you're one of our regulars, thank you as always. I appreciate a hunting party immensely. That, of course, Harry or Mama, and for my beautiful and our regulars, including starting with my beautiful Anusha Karsis, my clientele, investors, family, friends. McNeek, as always, I appreciate your support. Mind me while I get this camera going a little bit. Obviously, I'm holding this up for our group on hunting party group on Telegram. I started these meetings. They really were broadcast at the time on the steps of the Fed in November 2019. They've grown, they've emerged, and like all things, time must pass. And this is a celebratory week for myself. We're going to make this into a positive. This week, at the end of the week, Friday, I depart for Mexico, where I and my beautiful bride will finally be together, and we'll be in Mexico. It's not so much it is not a vacation, a holiday, or whatever, what you will. We're moving, and we're places that respect capitalism, freedom, and our rights. But more on that a little bit later. However, I want to impress upon everyone, this is a celebratory week. I started these events, as I said, on the steps of the Fed. They've changed through the period, and it really has been a remarkable time. We did everything that we wanted. We accomplished all our goals, and it really was incredible. It really was quite something. So here we are, back and around in our home turf. Here you go, everyone. We're seeing here in the beautiful meatpacking district, New York, and it is nice to be outside, isn't it? In a chilly February, but give you hints of spring to come. So this is a celebratory week, and I do want to emphasize that greatly. A lot of housekeeping to be going on in the next little while. As I've told you, I'm changing the start times of these sessions. I changed it last week and as well as this one. But I'm also going to be looking going forward, thinking of how we do the videos on YouTube, and I'm specifically discussing YouTube, and if we continue them. And it's just something that I want to make sure. My priority is to obviously our hunting party, my clientele, and of course managing my family wealth, and I want to make sure that's all covered. So let's see what we've got here. First of all, John, thank you very much for joining us. David, great to see you here. Cody, as always, thank you very much. Kayun from the West End of London, great to see you here. Greg, thank you very much for joining us. Dan, thank you very much for joining us. Appreciate it as always. Timo, great to see you today. Thank you very much. Dominic, appreciate it very much. Anthony, great to have you here. And Drew, as always, just up to 95 from you. So it's a celebratory mood, and it's a chance for a new beginning, and that's what's happening for us in Mexico. I'm going to Mexico. I'm establishing an office, maybe meeting with some very highbrow politicians in the area where I can build a new start and a new business. And it is time to turn the page, and that's exactly what's happening. I've spent so much of my career, my years here, and I do really appreciate it. But we did all that we could, and we did a great job since, again, on these events since November 2019, and we're looking for a new chapter as we head to Cabo San Lucas. So let's get into the market. But again, I'm going to be emphasizing, Romeo, thank you very much for joining us. This is a celebratory week. Hopefully the weather will hold for us, and I can stay outside in our morning sessions throughout it, and everything will be just fine here. Okay, so that's where I want to go with this. And oh yes, we're back in New York, so hold on a second. Yep, people want to always get in the camera. Okay, so yeah, we had an interesting week, of course, or interesting weekend, 3-day weekend. Nothing normal, of course, and with the events in Russia and Ukraine happening, it was highly predictable. I have been suggesting the rise of social conflict and the risk of war really for the last 2 years. It's part of the 100-year cycle and also due to the events of the last 2 years. Barry, great to see you here. Thank you very much. I appreciate it. Thank you very much, Barry. So we'll be seeing, this was a very predictable event in it. I suggested to you it would happen, I was waiting to the 22nd of February, so this cauldron boiled over on the 21st. But we also know the market tends to overreact and overreact it did in the earliest of stages. Now, for those who joined us at 2100 hours, I kept trying to emphasize as best as possible, calm, nothing America come from panic. And being calm also means you do not get caught in the euphoria. Well, let's go ahead and look at this market right now. Very intriguing session for us, or a very intriguing look from the market. Now, I want to also emphasize this past week, and again, something I emphasized at 2100 hours, the market is in many ways a technical no man's land. And the habits of the last, what I call 13 years of buying the dips, do not necessarily apply anymore. On Friday, we had the Dow close off some 232 points to 34,079, with NASDAQ off 168 to 13,548, and S&P down 3139. Once again, a very difficult point here to 4348.87. We're discussing on Friday the hopes of regaining that 200-day moving average, but of course it lost that ground and well off the 200-day. Now, for that, I want to remind you, with the 200-day moving average, you have to be very concerned with some very important technical areas. And, that losing the 200-day was very, very difficult. And with the 200-day moving average, one has to be quite aware of the statistical chance of dropping a further 10 to 15%. That's just something that we just have to be quite aware of, and until that is regained, we have to be aware of that 44.57. That's what we're looking at. Unless we regain that, or unless we had regained that, I would still my belief the market was susceptible to a 10 to 15% drop. This goes all along with my opinion that this market would, before it goes back into that northbound move to the all-time highs, would crater to that 3,800 to 4,000 mark. Now, I do not want to dissuade you at all from thinking that you can buy or dissuade you from the idea, or I want to dissuade you, from the idea of buying the dips. And without some a warning shot. This market is extremely overbought. It's horribly disconnected from reality. The market itself is probably to the tune of the valuations. I would put the S&P around the 2,600 to 28 level. Do not get caught in this. Yes, you could go out there and try to buy the dips, and absolutely, but I want to emphasize to people the importance of investing, not flipping, and do bear in mind that you're also susceptible to an extreme correction on this. That isn't a guarantee, but it's going to happen. It's not even a suggestion. It's just the things that you have to be aware of. We're professionals here. We're investors here. We invest, not flip. So be very wary of this situation, okay? So that's where I really want to emphasize. Now, obviously, what happened in the market on Friday, and what happened in the market this weekend, as we looked at what would influence the market this weekend, was the Russia-Ukraine front. This should not have been a surprise. We talked about this. I also even mentioned it. I did a podcast for Russell Warren I think it was December 18th. I think that was the day. And I mentioned this. And I believe at that time, if not, I may have mentioned it further on Twitter, but I looked at February 22nd as the big day. Certainly when the futures market opened last night, it was a heavy puke off, and it had, and quite frankly, again, what I mentioned at 2100 hours, I was expecting more. But and by the lack of heavy rollover, it was giving us ideas that this was going to fight to level, and this is exactly what it is, and that's what we are right now. Ostensibly, it's not even worth looking at our futures other than the fact that they have fought to near level. We have an implied opening of the Dow. I don't even need to quote it here. It's a implied opening of off 33 points. S&P virtually flat, and NASDAQ off 65 points. It's damn level. Okay, that's where we can put at it. Within our major front here, obviously what we're looking at, or at least my major focus right now, is looking at the response in gold. And this is where I wanted to mention to you, don't get calm, nothing in America comes from panic, and also don't get caught in the euphoria. in the early section, gold shot out of a cannon. And I just wanted to emphasize, don't get caught in this. It's far from a technical breakout on this, and gold is more emotional than pure technicals on it. And the same occurred within the greenback, as the greenback made a quick early move. The greenback made a quick early move to 96.26. However, since backed off 0.11 to 95.97. Very important lines there. And gold has had such an outstanding week, and we're all in this critique. Thank you very much for joining us. We're in a great position right now from where we rolled last week, and looking forward on this. And everyone in our team, we've been rolling up appropriately, taking out those beautiful scalps, and this is turning into an extraordinary quarter to start the 2020 year. Okay, so again, the greenback has given back some ground here, and so we're in a good position here. What obviously came off the highs was natural gas. Now it's still up over 4%. Natural gas up 18 cents, 0.183 to 461.4, and WTI soaring 3%, up $2.78, 93.85. Pretty much what I told you what would happen starting in April of 2020, that we would see WTI back into the 100, near approaching that century mark. Looks like we're all systems are go. And what I said to you in July before the most recent election, that should the Democrat candidate take the office, expect Carter 2.0 and an energy crisis. And maybe one day people will start to realize the importance of domestic being energy independent on that. Okay, within our metals front, this has been most telling. So let's go quickly to copper. Copper looked like it was selling off in a difficult situation, obviously with events in the Russian-Ukraine. Since regained that ground, it's virtually flat right now, hinting into the green at 452.7. Silver is a position, still one of the best investments I think one can make. I hope everyone's picked up their bullion, and how much bullion will I be taking to Mexico is the outstanding question of the day, or for that matter, how much bullion I will be bringing back. However, silver up just under 10 cents, 0.098 to 24.085. And with gold, now, as I was suggesting to you, you can't get caught in the euphoria. You all know by now that I'm I'm very bullish on gold long term. Heck, I've been accumulating and never sold gold since 1983. But gold shot out of a cannon, reaching 1918.19. Isn't that 1919 number that we discussed at 2100 hours, and since backed off? Still in the green, up by 60 cents, 1900.40, just over 1900. As I was saying, I wouldn't be surprised that gold, if it did a nice little pullback here, but nothing changes its intermediate and long term. My opinion on it, intermediate and long term, it just might be a little bit of time to take some profits. And well, don't be surprised if we get the bullion banks do their job, do their game again on that hustle. Okay, so that's where we are right now. And Martin, thank you very much. I appreciate it, and hope you are as well. So that pretty much concludes our opening session, our 2-minute drill for today. And I really want to emphasize, as I finish this off, this is a celebration week. I will be holding these meetings today, obviously today, Wednesday, and Thursday. There will be none on Friday because that is my day that I fly out. And but I just I'm hopeful the weather will hold. I'll find some way to do it. If not, but I just wanted to thank everyone. It really is. This has been such a joy for me since November of 2019. This really was something for me to do. I don't know when we will be back in the city. I can't tell you that. So when I look at this, I'm going to hold my head up high and remember the great moments that we did and the things that we accomplished, not only through these events, but through my career, and which includes financing some of the most remarkable business structures in this city, and helping business and investors for nearly 40 years. So this is my celebration, and I'm really glad all of you can attend. So we're going to give you a little look here at the Meatpacking District. Changed through the years so very much here, but really quite something here. And I want to thank everyone for joining me today. So I'm going to sign off first on YouTube. Hopefully I'm not going to fall here or do anything horrible in those last few days. And again, thank you everyone on YouTube, whether or not you're watching, you're live. Barry Martin, thank you. And Perry Ormama, once again, I thank you for viewing this. And we'll be back tomorrow, 0800 again. And just that reminder, as always, 2022, be the hunter, not the hunted.